Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's the 10th of August and we have with us on this Thursday afternoon, Phan Vee Leung. He's the founder and CIO of Track Record Asia. V, welcome to the show.
Hey Brian, let's talk about.
Now, first of all, before we talk about and get your insights about markets, we're going to take a look and see how the numbers stack up across the region. Now, we start first with Bitcoin. Bitcoin is at 29,549. It's down 0.55%. Ethereum is at 1,853. It's down 0.09%. Now, looking across the regional markets, Singapore has reopened after the public holiday yesterday. The SGX is down 0.2%. Bursa Malaysia is down 0.35%. Shanghai is down 0.28%. But we've got all green on the ASX, which is up 0.21%. The Nikkei is up 0.71%. The Hang Seng is down 0.86%. And rounding up the numbers, we've got the Kospi, which is down 0.35%. V, your views on market performance in the first half of the day?
Well, I think markets is just adjusting their positions ahead of the US CPI numbers later this evening, and that's going to be key for risk sentiment in the near future.
Now, so how should we as investors react? What are the scenarios that we should be looking for? If the CPI number disappoints, what should we be doing? And what should we be doing if the CPI numbers are better than expected?
Okay, cool. So as investors, we should always be relaxed, right? But how do we react is a very good question. It's a very good question. The Fed's primary focus remains on the US Federal Reserve remains very focused on inflation, and what we have been seeing in the past few months is the moderation of inflation from very high levels and the disinflation trend. The Fed has recently admitted that it is possibly likely to take a stronger hold of markets than expected. And if we should see that confirmed by the CPI numbers, meaning CPI, which is expected to be the headline at 3.3% growth in prices. If it's lower than expected, that's going to be very good for risk sentiment because it will reinforce the narrative that the Fed is very much at the end of their rate hiking cycle. But if it should disappoint to the upside, then it throws that debate wide open again. Is it possible that the Fed has not yet done enough? Is it possible that the Fed will have to increase interest rates further in the months ahead?
So then I want to take a different view then and of news flow that's just come out of China and the US this week. Now, Biden has signed an order limiting US overseas tech investment in China. How will that impact tech stocks in the US and of course in China as well? What would China's reaction?
This is quite a confusing situation. The US government have been making overtures to the Chinese government. They've sent key officials to visit. They've talked about want to reconcile and improve relations from a very bad situation from before. But that doesn't seem to be translating to action because the latest move to limit investment in the Chinese tech sector, which they deem may be dangerous in that can be used for military applications, is not going to be well received by China. China has reacted quite negatively towards it, and they reserve the right to respond. And I think the response would be what that the market would be fearing. If it should, the Chinese government should restrict sales of certain US tech companies in the US. That would be really bad for the US tech sector as well, because it's a big component of growth in their earnings, and also it's a big market for them. I think it's not good that the two biggest nations economically is going at odds with each other at such a juncture. We need them to be on a friendlier footing. Want inflation to continue to moderate further.
Now, on that note, V, thank you very much for your insights. Thanks for coming on the show.
Thank you.
Now, we've been speaking to Phan Vee Leung, CIO of Track Record Asia, on BizTech's Asian Midday Market Watch. I'm Brian Fernandez. Check out our website for this content at www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks for tuning in.